Today is Wednesday, June the 26th, and we're going to do the usual. Look at the volume in the Dow. Highest that we've seen, save for one day, in the last 2 or 3 weeks, but steady decline from the open. Advancers and decliners split, and advancers were up at about noon and into the afternoon, but there was some selling, as you can see, towards the end. NASDAQ, big pop up, and you saw that with Apple. It was opening $3 over, and then just a steady decline. Volume right at relative average volume, and so was the S&P 500. This is not a healthy market, folks. Even when there's good news, such as this morning when Mnuchin said that the China deal was 90% done, that got the pre-market going, and people were buying stocks in the pre-market, buying stocks at the open, and then the sellers stepped in because 90% is not 100%. And the last 10% might be the sticking points. The 90% might be, just table stakes that the Chinese were willing to give up. And I think that the market stepped back and said, wait a second, 10%, the last 10% is much, much harder to get than the first 10%. The day was split, green and red. This chart shows you the advancers to decliner about 50%. Healthcare took a beating. Don't know why. And utilities. Utilities are where people go, and consumer goods when the market is uncertain. That will bring us to a stock market breadth just pretty much where we started today, which is right near the neutral line. So we're sitting where there's more money moving out of the market than moving into the market. And the momentum of that is starting to pick up. Let's take a look at our favorite charts. The S&P down 360 despite its jump yesterday. Despite its jump at the open. I was a little distracted there. So this is your inverse head and shoulders we talked about. We came back and we retested that neckline from this point to this point. We're sitting on the neckline where we should get a bounce. It looked like we were going to get it today. Will we get it tomorrow, or will we fall through this? The 50 simple moving average is flattening out, and we have seen the 50 increasing, dropping a bit, and now it's flat. The 50 exponential, which relies more on recent days than on the first days in the 50, is still going up, as you would expect. The 200 is starting to flatten out as well, but it's been flat and hasn't been increasing too much in some time now. Apple finished over 200, so when I took my 200 calls out of the game yesterday, I bought them back. They were covering my stock, and I rolled down to 195s because I wanted to be protected for the rest of the week. I don't regret that move. Obviously, if this continues, I'm going to lose the stock, and I'll have to buy them back next week, but I'll buy them back as covered calls, continuing to hedge my bets as Apple moves up to this gap. We've still got that flat inverted cloud ahead of us here. Caterpillar, 135. My short calls are 133 and 134. Again, the week isn't over. Look at all the work that the Chiku span has to go through. It's been through the 50 exponential, the 200 simple, stopped right where the 200 simple and the 200 exponential and the 50 simple are converged. So that's double resistance, and that was enough to end the day right there, stopping with the Chiku span. Trading was pretty low volume here for Caterpillar. Gold, I was getting ready to sell some of my shares at the beginning of the day when I saw the initial drop down to here. And then gold buyers stepped in, so the gold miners pulled up and finished a day like this, where it finished above its midpoint but below its high, and down from yesterday but only 17 cents. So I'm still bullish on the gold miners. WDC, what a day. Look at that pop, but we have a big gap to fill here. And WDC is a stock that will fill gaps just like others. You can see this gap in here got filled before it moved up. There's a gap in here that got tested right there, and it fell down. Here's another gap in here, and it came back to fill the gap, and then it took off. So it's going to fill that gap, and it stopped below the 50 simple moving average, but above the exponential moving average. That 50 exponential is starting to curve up, and so is the 200 exponential. So the Chinese news was good news for this stock, and we've been saying that all along. Now, Whirlpool, which I got rid of yesterday because I didn't want any exposure throughout the week before the China-Trump meeting, which apparently now is going to be Saturday night at dinner. So imagine how people are going to be buying puts Friday to protect themselves over the weekend. I am not planning on adding back any of the stocks that I covered or that I sold, and I'm going to wait for Monday. I may lose on some upside, but I may be able to buy back on some downside. And we still have not broken this trend line, but we did come close to it. So Whirlpool still looks like a stock that needs to break out before I'm going to jump into there again. So that was 6 minutes today. I hope you had a good trading day. Look forward to talking to you tomorrow. What can we look forward to? More of the same, which is up and down, but generally trending to flat.